All right. So, hello everyone, and welcome to today's webinar entitled 2023 ITR Preparation for Individuals, Consultants, and Freelancers. I am your virtual moderator, Orly May Vincolado. So, I can see a lot of new faces here today. So, welcome everyone. And before we start, let me read to you our house rules. First, kindly change your Zoom name to name plus company name by clicking the participants icon and hovering your cursor, head over your name and choosing rename. Second, be respectful and an active listener so that we always stay on topic. Then, keep yourself muted unless speaking or engaging in conversation to reduce background noise. And lastly, use emojis and the chat feature to react, ask questions, or make comments. All questions will be answered during the Q&A portion. To give you a comprehensive full suite service of portfolio of InCorp Philippines, InCorp Philippines is one of the Asia Pacific's leading corporate solutions providers, and we offer services such as incorporation, secretarial and compliance, product registration, bookkeeping and payroll, taxation, immigration, HR and recruitment, risk assurance, and corporate recovery. And we have regional presence in Singapore, Indonesia, of course, Philippines, Malaysia, Hong Kong, Vietnam, India, and Australia. And now, without further ado, let me introduce to you our speaker. Our speaker for today is Ms. Ramyline Depalubos. She is the Associate Director for Financial and Tax Compliance of InCorp Philippines. She has a robust blend of expertise in Philippine tax compliance, comprehensive general bookkeeping, auditing, and business process optimization across diverse industries. Her practice areas are Philippine tax compliance and comprehensive general bookkeeping. She took a Bachelor of Science in Accountancy at Central Philippine University and a certified public accountant since 2012. Ladies and gentlemen, let us all welcome Ms. Ramyline Depalubos.
All right. So again, good afternoon. So I'm Anne Depalubos from the Financial and Tax Compliance Department of InCorp. So we assist our clients in terms of general bookkeeping and tax compliance. But for purposes of our webinar this afternoon, we would be focusing on the some of the insights and reminders on how we could help you in terms of the preparation of your annual income tax return for the taxable year 2023. So as some of you might be aware, it's not just corporations who are required or mandated to file an annual income tax returns. So individuals, consultants, and freelancers alike are also required to prepare such form. So this would be our discussion flow for this afternoon. So we would be first we would be setting our learning objectives. What are the things that you're expected to learn after this webinar? And then we would proceed with the discussion proper. And I would be giving some reminders that you could take advantage of in terms of preparing your 2023 ITR. And lastly, we will be opening the floor for some questions later. So without further ado, let's start. So here are our learning objectives this afternoon. So first, we would understand who among the individual taxpayers here in the Philippines are required to file the income tax return. Second, we're gonna understand what comprises gross income. So lahat ba ng revenue streams or all incomes are this subject or reportable to in computing for your income tax? Second, are there any allowable deductions? So meaning, are you allowed to claim certain expenses? What are these expenses? And then we're gonna also share or impart with you on the steps on how you could prepare your annual income tax return. Where do you obtain tax forms? How do you accomplish it? How many copies to print? Where do you pay? Such questions. And also, when is the deadline on filing this income tax return? Are you still on time, late na ba, may penalties na ba, all that. So we're gonna understand when is the deadline of filing such ITR, and then where do you file and pay this income tax return. So to start, here is the general category of income taxpayers here in the Philippines. So it's categorized as resident citizens, non-resident citizens, and aliens. So who are these resident citizens? So basically, these are Filipino citizens, and during the taxable year is residing here in the Philippines. So these are, of course, these are Filipino citizens here in the Philippines. For resident citizens, they are being taxed for all income sources. So meaning income here in the Philippines, and also if there are income coming outside the Philippines. So all income sources are being taxed for resident citizens. So the next category are the non-resident citizens. So non-resident citizens are basically Filipino citizens, however, during the taxable period are either abroad, or those individuals that are not in the Philippines when the income is earned during the taxable year. And also we have aliens, or these are foreigners. Aliens can either be residents here in the Philippines or non-residents here in the Philippines. So what's common between this, or what's common among these non-resident citizens and aliens, is that only their income in the Philippines are taxed for purposes of reporting the income tax here in the Philippines. Again, just to clarify, resident citizens, or as Filipinos who are here in the Philippines during the taxable period, are being taxed for all our revenue streams here in the Philippines and abroad. However, for non-resident citizens and aliens, they are only being taxed for income earned here in the Philippines. So I hope it's clear. For the purposes of our discussion this afternoon, we will only be focusing on the resident citizens. So I think this is the most common, or uh, this is the common status of our attendees for this afternoon's webinar. So what are the sources of income? So ano-ano ba yung mga income streams, or what are ano yung mga tinatax na rin, or what are reportable for purposes of the income tax. So first, we have the compensation income. So basically, if you're an employee, this is your category. So when you earn income coming from your employer, so this source of income comes from your compensation. So you are basically classified as an individual earning purely compensation income. So there are also individuals who earn income from the conduct of trade or business, or their practice of profession. So these individuals are categorized as either single proprietor or professional. And then we also have individuals, this one, the individuals who do side hustles. So aside from being an employee of a corporation or a company, is also doing some sort of business, or like other consultancy works. So these individuals are deriving income from both compensation and the conduct of trade or business and profession. So we usually call these individuals as taxpayers who are reporting mixed income. So when we say mixed, it's a combination of either from your compensation and from business or your profession. And we also have passive income. So once we say passive income, it's just like when you have property and you lease it out, or you have tenants, so that's some sort of like a passive income. So you do not require any works from your end. So there's just like an investment or a property, and that's what we call as the passive income. Okay. So now we would understand, are there individuals exempted from filing an ITR? So yes, there are individuals exempted from filing the annual income tax return. So who are these individuals? So first, if you are earning purely compensation income, and your taxable income during the taxable year. So for example, our recent taxable year is January 1 to December 31, 2023. So that's the annual income tax return that we're preparing. So if you're earning purely compensation last taxable year 2023, and your taxable income did not exceed 250,000 pesos, you're exempted from filing an income tax return. Second, if your sole income has been subjected to final withholding tax, or you are exempt from income tax. So what are examples of income subject to final tax? So if you have received dividend incomes from corporations, so those are subject to final withholding tax. If you have received interest income, so those are also subjected to final withholding tax. So if that is your sole source of income, meaning that's the only revenue stream that you have, so you're exempted from filing an ITR. Also, if you are a minimum wage earner, you're also exempted from filing an ITR. And lastly, if you are qualified for the substituted filing. So what is this substituted filing? So these requisites, meaning all of these requisites that you can see from your screen, have to be present for you to be able to avail of this substituted filing. So what are these requisites? So first, if you are an employee receiving purely compensation income during the year, so again, your only source of revenue is your compensation from your employer. Second, the individual has received an income from only one employer in the Philippines during the taxable year. Again, it's being highlighted that only one employer in the Philippines. Later on, we would be discussing what happens if you have um, more than one employer during the taxable year. And then next is that the amount of tax due from the employee at the end of the year equals the amount of tax withheld by the employer. So this is the purpose why we do the annualization at year end, so that to ensure that whatever is the annual tax due equals to the tax withheld during the year. And for married individuals, the employee's spouse should also comply with all the conditions above, and the employer files the annual information return, or the BIR form number 1604 CF, and the employer issues BIR form number 2316 to each employee. So again, please take note, for the employee to be able to avail of the substituted filing, all of these requisites must be present. So it's not just one, two, or three requisites, but all of these requisites. Okay? And then we're gonna understand what comprises gross income. So basically, all gross income, or all the inflow or your revenue sources, or all income you derive from whatever source, is reportable or to be declared to the bureau. So these are your compensation coming from your employees, your income from your trade or business or the exercise of profession, your passive income, rental income, interest income, the dividends, prizes and winnings, and if you're a partner, your partner's distributive share from the net income of GPP. So basically lahat-lahat. Walang takas for the BIR unless your income belongs to those exempted from the income tax. And so the next question is, um, what's the tax base? Is it the revenue, the gross receipts? Are we allowed to deduct expenses? What are the allowable deductions? So this slide, we will discuss what are the methods of deduction, or what are allowable deductions. So the first method is the optional standard deduction, or the OSD. So for this method of deduction, an individual or the taxpayer, once you opt for the optional standard deduction, you are allowed to claim 40% of your gross sales or gross receipts as your allowable deduction. So whatever is your total gross receipts or gross sales during the year times 40%. So that is your allowable deduction. So which means that automatic 60% of your gross receipts or gross revenue would be subjected to income tax. Okay? And availing of this OSD is not automatic, meaning you have to signify it in the return, and it would be irrevocable for the taxable year. So again, it's irrevocable during the taxable year. However, comes the next taxable year, you may again select either OSD or the another type of deduction. And OSD is available to all types or categories of taxpayers. Remember, we have discussed the resident citizens, the non-resident citizens, the aliens. However, OSD is not applicable, or it's not allowed for non-resident aliens, okay? And if you're claiming for OSD, you are no longer required to submit a financial statement, because submission of financial statements, especially the AFS or audited financial statements, is required for individuals earning gross sales or gross receipts during the year of 3 million pesos and above. So an AFS is required. So, but when you're using optional standard deduction as your method of deduction, you're not required to submit FS. However, what's tricky for the optional standard deduction is that you must be very careful of your records, especially for the support of your sales or gross receipts, because again, the basis of the 40% deduction is based on your gross sales or gross receipts. So it's very important that your basis, the official receipts, the invoices, it should be intact. Because at the end of the day, if there would be BIR audit, they would base or they would check on those receipts for them to be able to establish that the 40% allowable deduction you have claimed is correct. All right. So for the next method of deduction, it's what we call as the itemized deduction. So the major difference between optional standard deduction and the itemized deduction is that for itemized deduction, there's actually no limit on the amount of expenses that you can claim, so long that those expenses are related to the business. It's ordinary, it's necessary for you to do the business, and it's supported by invoices and receipts. So this can be claimed as deductible expenses. So later on, when we try to scrutinize or when we try to check the fields for the income tax return, you will see there the example of expenses that you can claim as itemized deduction. So again, the major difference between these two is that itemized deduction, you're allowed to claim all business-related expenses so long that it's supported by invoices and receipts. Okay, so we have already discussed about the categories of taxpayers, what are the reportable or what consists the gross income, what are the allowable deductions. So now the next question is, paano nga ba mag-file? How do we prepare the annual income tax return? So it actually is very important that before we discuss how to file or how to accomplish this return, we learn what are the type of forms that is necessary for you to be able to report your income during the year. So there are actually three forms related to the reporting or filing of income tax for individuals. So again, if you can recall, we have three general categories for taxpayers based on the source of income. We have first the compensation earner. Second is we have the mixed income earner, and then we have the single proprietor, or those reporting purely income from the business, trade, and profession. So the first form, this BIR form number 1700, is applicable for individuals earning purely compensation. So you may ask, why do we have to fill out this form if our employer also prepares the 2316? So again, remember we have discussed earlier that for substituted filing, that is only applicable if you have one employer during the taxable year. So now if you have two or more employers during the year, you as an employee, as a taxpayer, is responsible to consolidate your income from this employers. So to consolidate this income, this form, this BIR form number 1700, is the form that you need to use for you to consolidate all your income. Okay, so again, this 1700 is dedicated for individuals earning purely compensation. The next type of form is BIR form number 1701. So the BIR form number 1701 is applicable for individuals or those mixed income earners. So these are individuals earning both compensation, um, uh, earning from the conduct of trade and business, and or earning income as professional. So this form will again consolidate all your income from both being an employee and as well as being a professional, a consultant, or a business owner. So you use again BIR form number 1701 to consolidate this type of income. So the last type of form is BIR form number 1701A. So this is applicable if you are an individual earning purely from the conduct of trade or business or your profession. So you use this form, BIR form number 1701A. So again, there are three types of forms. I know it can be confusing, but again, 1700, that's for purely compensation income. 1701 is for mixed income earner to consolidate compensation and business. And 1701A is for purely income from trade, business, and profession. And now you have already learned about the different type of forms. So your next question is, where do we file it? Where do we obtain these forms? So these forms are available in three different platforms. So depending on your mode of filing, you can either be a manual filer, a filer using the EBIR form package, or you are a taxpayer filing through the EFPS. So among these three modes of filing, only the EFPS mode needs to be enrolled to the BIR. So this one is actually web-based, the EFPS. So EBIR form is a downloadable software or desktop application from the Week BIR website. And the manual filing is literally, it's manual. You need to print the form from the BIR website, and you need to either you can encode through PDF editor or whatever platform you can edit such PDF, or you may print this PDF and manually handwrite on these forms. So again, depending on your method of filing, you can access these forms first. If manual, you go to the BIR website and print these forms. If you opt to use the EBIR form package, this is downloadable from the BIR website. Later on, I will show you how to download this EBIR form package. And for EFPS, this is not automatic. You need to enroll this to the BIR. It can be voluntary. However, for some individuals, this is mandatory. So most common situation wherein EFPS is required, if you're an individual and you're dealing with contracts with the government, so meaning you join government bidding and the likes, so you are mandated to use the EFPS website package in terms of filing and paying of your taxes. All right, so we're gonna discuss each one of these modes so you have an idea on how the process and steps goes in terms of filing in these different platforms. So for the manual filing, first you have to print and fill up the applicable BIR forms in triplicate copies. Again, it's triplicate copy. You can again access this through the BIR website, print this in PDF, and fill out the information. So later on, I will show you the different fields that you're gonna accomplish in the forms. So once you have printed and filled out the forms, you have to proceed to the Revenue District Office or the AAB where you are registered and file and pay for the related taxes. And once you have paid, you would receive a copy of the duly stamped and validated form of the specific tax form that you have filed. So as I've mentioned, you need to print and fill out in triplicate copies because two copies would be retained by the BIR. Excuse me. Two copies would be retained by the BIR and one copy is for you to safe keep. Okay. So this actually, the EBIR form package is the most commonly used method in terms of filing and paying taxes because this is easier. So you just have to download the EBIR package from the BIR website. So you go to any browser, type in bir.gov.ph, and then you would be led to this launch page, and you go to homepage. So again, bir.gov.ph, go to homepage, and you will see this option. So you can see there the EBIR forms. Yeah, to download offline EBIR form package. So you have to click this one, and then you have to follow the usual steps on how you download desktop application. So it's just the same. So you download and then you launch the EBIR package application. So once you have successfully downloaded and launched the EBIR form package, once you open the application, this would be the home screen. This is your home screen. So as you can see here, before you can begin preparing any tax return or tax form, so you need to set up your taxpayer profile. So you will ask, what document do we need in order to set up the taxpayer profile? So if you are a business owner, you will need your BIR form number 2303, or that's your certificate of registration. So if you're an employee, you must have your tax identification number, your tax registration details, for you to be able to set up this taxpayer profile. Again, this EBIR form package or this platform is not only limited in preparing your annual income tax return. You can also use this, or this is also the platform that you can use in preparing any other type of tax form. Okay. But again, for this afternoon, we're just focused on the annual income tax return. So you set up your tax identification number, the revenue district office where you're registered, your line of business, again, if you're a business owner, a professional. So you can see this from your certificate of registration, then your registered name, address, your telephone number, and please take note that you have to be very careful when you update this field, the email address. This one must be an active email address because this is very crucial. This email address will also receive the confirmation reply that you have indeed successfully filed any tax form. So without that tax confirmation reply, it would be very hard to argue that you have successfully filed a tax return. So again, please ensure that the email address, it's the correct spelling, and also it's an active email address. And once you have successfully updated this taxpayer profile, so this is how it would look like. Okay, there's a TIN number, RDO, line of business, email address. So now, once this is already set up, you can begin preparing tax forms. Okay, so you just have to select the tax form that you would like to prepare. So again, and for our example, we're gonna prepare BIR form number 1701. So just a recap, BIR form number 1701 are for mixed income earners, meaning individuals earning both compensation and income from trade, business, or profession. So that would be our example. So once you selected the form that you would like to accomplish, so there would be, it would lead you to a page wherein there would be a return and there are different parts of the tax forms. So for our discussion, the entire tax form is consists of 9 parts. But for our discussion, we would only be until part 7 because part 8 and part 9 are more on the reconciliation of your income against your income per books versus your income in taxable income. So that's just a recon. So here are the fields that you need to accomplish for you to be able to file a return. So part one is more on the background information of the taxpayer filer. So this is how it looks like. So part one, so some of the parts here, especially those that you can see that are inactive, are already pre-filled. So this came from the taxpayer's profile. So your TIN, your registered name, your address. So I want you to pay attention to this part because this one is the period or the tax period that you are reporting. So as mentioned, the most recent tax period that we're reporting is for December 2023. So when you will prepare this form, you have to update this. The month should be 12, which represents December, and the year should be 2023. Okay, because this is an initial return, it's not an amended return, so you choose no. And you have to type in here your date of birth, your citizenship, your civil status there. And then, as I have discussed earlier, this is the method of deduction. If you are choosing or opting for the graduated rate, so you have an option to either claim for the itemized deduction or the optional standard deduction. However, if your tax rate is the 8%, so there's no available option on the deduction. So maybe you're asking, wait, we have not discussed about this graduated tax rate and then the 8% tax rate. So what's the difference between the two? So here, so the graduated income tax rate is basically the tax table. So I know many of the attendees here are from the HR department of their company. So this is the same tax table that you use in computing for the taxable income or tax due of the employees. So that's the graduated income tax rate. So you either choose the graduated income tax rate as your tax rate, or you may use the 8% income tax on your gross sales in excess of 250,000. Please take note that the 8% income tax on your gross sales after 250,000 is only applicable for individuals earning from business or trade if you are not VAT registered or your gross sales or receipts do not exceed the VAT threshold of 3 million pesos. But if your business is VAT registered or your annual income during the year from your business or profession exceeds 3 million, so you cannot use the 8%. So again, if you're a business owner or a profession and your income exceeds 3 million pesos during the year, you cannot opt for the 8% income tax on your gross sales or gross receipts. So that's the difference between the two. So you have to choose here if you're gonna be taxed on graduated rate. So if you choose the graduated rate, you have also to choose what's your method of deduction. Would it be itemized deduction or the 40% optional standard deduction? But if you choose the 8%, so you no longer have the option to claim for the method of deduction. So for the 8%, the meaning how would it be computed? So meaning your total gross sales or gross receipts during the year less 250,000 times 8%. So that would be your tax due for the year. Okay? So that's the first part, the background information of the taxpayer. The part two and part three is all about the total tax payable and details of payment. So for this part, the tax due, the tax credits, so these are being automatically computed by the system. So later on, we would be discussing on how we fill out or how we input the amounts on the fields for the system to be able to compute the related tax due. And what do we mean by tax credits? What's the source of tax credits? So again, part two is automatically being computed by the system. So if you would try to prepare this form, you may be wondering later on that you cannot edit this portion. So usually what we do is once we're done filing and submitting the form, we would print it in PDF copies. And once we have saved the PDF copies, that's when we update this portion. So don't forget to update this before you pay your return. You have to print in your name, place your signature over this field. Okay, that's for the part 2 and 3, the total tax payable and details of the payment. So we now come to part 4. So again, if you are a married individual and you wanted to consolidate your income return reporting with your spouse, so you also need to update this portion. So this is the background information of the spouse. All right. And then the next part, so here comes the most exciting part, the computation of tax. So that's for part 5. So for part 5, there are 3 schedules that you need to accomplish. So schedule 1 and 2 is would schedule 1 and 2 is likely to focus on the details or information of your compensation income. So let's check. So for schedule 1 and 2, the basis of accomplishing this field would be your BIR form number 2316. So again, your BIR form number 2316 would come from your employer. So as you can see here, you need to provide the name of your employer, the employer's TIN, and then the details of your compensation, your gross compensation, the non-taxable part, and then the tax withheld. So all of this information are available in BIR form number 2316. And then if you are an individual earning from trade, business, or profession, you either choose to fill out Schedule 3.A or 3.B. So 3.A, if you choose the graduated tax rates. Okay, so 3.A if you choose the graduated tax rates. So here you would indicate how much is your total revenue or receipts during the year. So how much is your cost of sales. But this is only applicable if you're availing of the itemized deduction. So again, we have discussed of the um, itemized deductions and the OSD. So OSD is automatic 40% of your gross receipts or sales. That's your allowable deduction. So as I promised earlier, I'll be sharing with you the most common examples or the list of allowable deductions. So as you can take time in checking what are the allowable deductions. So you can have your amortizations, depreciation, entertainment, amusement, and recreation. So if you're a consultant, you're meeting clients and all that. So there would be meals, there would be transpo and all that. So this is where you can claim for those expenses. So you have your rental, this payment of your government contributions, taxes, and all the likes. So this field are needed to be um, inputted, or you need to populate this with the amounts if you're claiming for itemized deduction. However, if you're claiming for the OSD, so no need to fill out that part. Okay. So what's Schedule 3.B? So 3.B is this is the schedule that you are to accomplish if you opt for the 8% flat income tax rate. So this is how it looks like. So the 8% flat income tax rate, you only need to provide or input your total sales or revenue or receipts during the year. So you input it here. And it states here that, as mentioned earlier, the 8% is based on your total sales, revenue, or receipts less 250,000. However, if you are a mixed income earner, your 250,000 was already considered when your taxable income or your tax due as an employee was computed. So you're no longer allowed to again claim for the 250,000 in computing for your 8% on your business, trade, or profession. So if you're an employee, so automatic whatever is your sales or receipts times 8%, that is your tax due in terms of your income from business, profession, and trade. Okay. So basically, that's the part 5, or the computation of tax. As earlier I have shown in part 2, there is a portion there that would reflect the tax credits. So again, tax credits are used to reduce your tax due, or your net tax payable at the end of the year. So what are these tax credits? So for some of you here who are rendering professional works, consultancy works, or if you're leasing properties to tenants, they might be withholding a certain amount from their income payments to you. So if they are withholding, they should also provide a certain tax creditable certificate form. It's BIR form number 2307. So those forms are actually paper money. So why do I say paper money? Because at the end of the year, when you file for your annual income tax return, those tax credits can be used as a reduction of your annual income tax due. So those tax credits, you need to accumulate, or you need to keep all those 2307 forms you received during the year, and you input the total amount here. So creditable tax withheld per BIR form number 2307. So you have to input it here. And also, if you are an employee, again, whatever is the total tax withheld based on your BIR form number 2316, it would reflect here. Okay, so it would reflect here. And also, uh, there are recent updates in terms of PERA. So your PERA TCC, or the tax credit certificate from your PERA contributions, the 5%, can also be claimed as a tax credit. So based on the BIR RMC, the 5% TCC, 5% para TCC should be inputted in this section, the other tax credits or payments. And then you have to type here 5% para TCC. Okay? So this is the field that you are to accomplish for you to be able to claim the tax credit from your tax credit, or the withholding tax from your para contributions. Okay, so again, I'll show you that part wherein the tax credit will be computed. So here, so tax due coming from your compensation, your income from trade, and then less any tax credits. So the bottom line would either be a total amount payable, or the net amount payable, or an overpayment. Now, if it's an overpayment, you may choose to either have it refunded, issue a tax credit certificate, or to be carried over as tax credit for the next year or quarter for most of the individuals, so that it's actually quite a hassle to ask for refund or file for a TCC. So most of the individuals would opt to have this check to be carried over as a tax credit for the next year or quarter, so that in the next year you can actually again use whatever excess you have during the year in terms of computing your net tax due. All right. So once you have completed all these fields, the next thing that you are to do is to validate your tax form. So there is a portion in the EBIR form package that you have to click for the system to check that all the required fields have been properly filled out, meaning there are amounts or amounts were inputted in fields that are required. So once it's successfully validated, you can submit it electronically, and then you have to wait for the TRRC. So TRRC is receipt return confirmation. So it's a proof that you have successfully filed the tax return, your annual income tax return, or any type of tax form. So this TRRC would be emailed, or it would be received in the email address as you have inputted in the taxpayer's profile. So once you have received the TRRC, you can now print again in triplicate the form and the TRRC. So once you have printed this, you would proceed to the nearest AAB or the authorized agent banks under the jurisdiction of your RDO and present the printed tax forms, the TRRC, together with the required attachments. So the required attachments are your 2307 certificates, your 2316, your PERA TCC. So those are the required attachments. So you may pay this in any authorized agent bank, or you may also pay online. So these are the e-payment platforms. So Union Bank, Land Bank. I'm not sure if GCash, because as per last checking, GCash is still inactive in terms of processing payments to the BIR. You can also pay via PayMaya or credit cards actually, but there is a certain service charge. So again, you can either pay over the counter or through these electronic platforms. And once you have processed the payment, you would receive a copy of the duly stamped and validated tax forms. You have to, again, since it was printed in 3 copies, 2 copies would be retained, and then 1 copy would be for your safekeeping. So that's for the EBIR package. So we have discussed the manual, the EBIR. So now for the EFPS. So this would just be a very quick, because for most individuals, you use the EBIR form package. So for the EFPS, so you have to process enrollment of the EFPS to the BIR RDO where you are registered. So once you have processed the enrollment, you can log into the EFPS via the website. And then, so once you have logged into the EFPS accounts, you have to select the applicable BIR form. And same process with the EBIR package, you have to fill up the required fields. So once you have filled it up, you would pay it electronically. So for the EFPS system is directly connected to the bank account that you have chosen to process your BIR online payment. And then once you have paid, you have to wait for the payment confirmation for the successful e-filing and e-payment. So this is how the EFPS account looks like. Again, this can be accessed through any through Google Chrome or Internet Explorer, Mozilla Firefox. So you can access this EFPS. So this is how it looks like. All right. So the question now is, when is the deadline to file the annual income tax return? So just like those of the corporations, the deadline of the annual income tax return is on or before April 15. Okay, it's on or before April 15. So here are some of the reminders that I would like to share with you in terms of preparing and completing your um, annual income tax return for 2023. So if you're self-employed, meaning if you do business or you conduct trade or profession, you have to go to the nearest RDO for you to be able to be registered with the BIR. You have to maintain books of accounts and issue necessary invoices and official receipts. Second, if you're an individual deriving compensation concurrently from 2 or more employers, during the year, you need to file for BIR form number 1700 for you to consolidate your income. So if you're a mixed income earner, you have to file BIR form number 1701. Again, you have to attach the necessary documentary requirements upon submission of the applicable form. So as mentioned, here are the documentary requirements: your BIR form 2316 or your certificate of income tax withheld on compensation, BIR form number 2307. So this is most common if you are earning professional services, consultancy services, if you have a tenant, meaning you're earning rental income, your PERA TCC, your annual information form if you're for self-employed individuals, and if you're required to attach an annual audited financial statements, it must be audited by a CPA. So if the you as mentioned, you have to really ensure that if your client, your customer, your tenant is withholding from their income payments to you, you must obtain a copy of the 2307. Again, it's paper money. And a TRRC should be received to ensure successful filing of BIR form using the EBIR form package. So the TRRC is your most or that is your evidence or proof that you have successfully filed, because there would be instances that even if you have clicked that button submit final, so that's the button when you submit any tax return, there would be instances that there would be error. So the only time that you can really be sure that you have properly filed the tax return is when you received a TRRC in your registered email address. And then lastly, you may pay actually in two installments when the tax due exceeds 2,000 pesos. So the first 50% or the first installment shall be paid at the time the return is filed. So meaning once you file the return on or before April 15, that's when you pay for the first installment. And the second installment can be paid on or before October 15, following the close of the calendar year. So when you pay for the second installment, you have to use BIR form number 0605. So that's it for the things that we wanted to share with you in terms of the preparation of your 2023 annual income tax return. So again, thank you everyone for your time this afternoon. Orly?
All right. So thank you so much, Miss Anne, for that very informative presentation. So we have received two advanced questions. And the first question is, for employees with two or more employment or sources of income, how will they file their ITRs? Should the individual or the employer file?
Yeah, so thank you for that a question. So as discussed earlier, if you are an employee with two or more employers during the taxable year, it is your responsibility to consolidate your income coming from your employers by referring to your 2316, and you have to file the form BIR form number 1700. So again, it's BIR form number 1700, and it's the responsibility of the employee.
All right. Thank you so much, Miss Anne. So another question is, how can the tax certificate or TCC from PERA be applied to their ITRs?
There. So as I have shared earlier, there is a portion there for the tax credit that you have to the field for the other tax credit, you have to indicate there the 5% para TCC, and then the amount you just have to be sure, or you have to ensure that you have the TCC already, and it's a required attachment. So if you have the TCC, you have to attach it, and then the amount of whatever was withheld, you have to input it in that field that I have shown earlier.
All right. Thank you again, Miss Anne.
Thank
So
you,
are there
Early.
any more questions? Please feel free to ask. Okay. Have another question from RCAL Dave. Meron na po ba sa EBIR Form 2023 rate?
Yeah, for the EBIR Form 2023 rate, is this for the individual? If this is for the individual, yes, there is already an available rates, I believe, in the in the latest EBIR form package.
Okay. Have we answered your question, Sir Dave? Okay. So let's proceed to the next question. When is the deadline to issue the copy of their BIR 2316 to employees?
Yes, the 2316 should be issued to the employees on or before January 31.
Okay. So that's January 31. All right. Thank you so much for asking, MJ Cabiles. We have an anonymous attendee, and the question is, how will we apply the TCC from PERA for substituted filing employees to their BIR 2316? If the TCC is for 2023, but the BIR will only issue the copy in the second quarter of 2024, can we apply the TCC for 2024 then?
Actually, that's a very good question. I did a little bit of research about the para TCC, and it's actually one of the questions being raised because if we try to read the RR, the deadline for or the para TCC is to be submitted or to be the administrator is required to release the TCC 60 days from close of the calendar year. So if it's 60 days, so basically it's around March 1 of the following year. And then we usually finalize the annualization at around January, right? So as mentioned, 2316 should already be available on or before January 31. So what's clear in the available BIR issuances is that the TCC, for example, for 2023 should be um, claimed in the same time when the contribution was made. So that's that is what is clear based on the current guidelines issuances. So if there would be updates because there are questions raised, hopefully there would be clarifications to be released by the BIR on that one.
All right. Thank you so much, Miss Anne. Next question from anonymous attendee again. What if the new employer already consolidated the taxes from the previous employer of the employee? Should the employee still file the BIR 1701?
Yes. So as mentioned, there are the requisites for the substituted filing. So as mentioned in those requisites, substituted filing is only applicable if you have received compensation income from only one employer during the year. So if you have two or more employers during the year, you have to consolidate the income through it's actually 1701, yes, if you're a mixed income earner. So there.
Okay. Another question from RMC. Hi, good afternoon. This is RMC of GMRDC Corporation. Is 1604 CF connected with 2316 filing? If so, what is 1604 CF for, and what are the attachments needed to submit this? When is the due date? What is the new 1604 CF form from the old one? What is
Yes.
the new 1604 CF form from the old one?
Yeah, thank you for that questions. Actually, just to share with you, we have also a separate department handling payroll concerns, but I will try to answer your questions on general level. So 1604 CF, there is actually a new form. In the new form, the 1604 C, that's for the annual info return in relation to the income tax withheld on compensation has been split. So there is 1604 C and there is 1604 F for the final taxes withheld. So that's the new form. It's available both on the EBIR form package as well as the EFPS. So if this is for corporations, um, again, if you are an EFPS user or filer, per our experience, it's not automatically appearing on the EFPS system. You need to go to the BIR and request that the 1604C and 1604F should be updated in the EFPS database. So yes, there is a new form. So the difference is the tax form only split or hiniwalay niya yung 1604C for the compensation and then yung 1604F for the final taxes. So when is the due date of the 1604C and 1604F are required to be filed or submitted electronically on or before January 31. Okay. So
Okay.
Okay, I think I have answered the question. So 1604 CF, what it's for. So it's being used to report the annual information in relation to the taxes withheld for compensation.
All right. So thank you so much, Miss Anne, for answering all the questions. It was very insightful indeed. So that concludes today's webinar. Thank you so much, everyone, for attending. And we will be sending you a feedback form. And once we receive your feedback, we will send you a copy of the presentation. If you need assistance from our consultants, please feel free to reach out. We could help you to consolidate and file your ITR. So I hope all of you were able to gain important information about ITR preparation. It's been a pleasure being with you all today, and I'm looking forward to seeing you again in our next webinar. Again, this is Orly May Vinculado. Bye, everyone!